2023 was an absolutely amazing year for the stock market. The S&P 500 index alone returned 24.2%. But even with a great year for the stock market this past year, there were some stocks that were absolute crap. And in this video today, we're going to explore my top 5 picks for the worst performing stocks of 2023. And just for a little bit of fun, we're going to see what happens if you would have taken $10,000 at the beginning of 2023 and invested in each and every one of these stocks. What would your $10,000 look like today on New Year's Eve 2023? So let's get right to it. Now, the number one stock, we're going to start with the least amount of loss to the worst amount of loss. And trust me, number one is going to completely blow your mind, as it did mine. And it's actually one of those stocks that the YouTubers have been hyping quite a bit. So buckle up and stay tuned for that one. But let's start with number 5, which is still a doozy, and that is none other than an S&P 500 fund, this company known as Moderna. Ticker symbol MRNA. You know, the vaccine people. Of course, they do a lot more than just do vaccines, but a lot of people know Moderna for the COVID vaccine. But here's the kicker. In 2023, their total price return on their stock price was negative 44.44%. You'd lose nearly half of your portfolio in 2023 if you tied up all of your portfolio in the Moderna stock. And Pfizer is just as bad as Moderna. Both of their stocks did not have a good 2023. So have a look at their revenues. Over here on Seeking Alpha, I track this consistently. And even though we see revenues in the billions, which is great, they are fairly stabilized through each quarter of 2023, but their profit is absolutely awful compared to their revenue. So they're losing money in profit, and it's growing from quarter 1 to quarter 2, quarter 3, and growing in the opposite direction. Their profits are getting worse as we go out through the year. And remember, each quarter represents 3 months of the year, so every 3 months they're reporting even worse profitability. So let's say in January 1st, 2023, at the beginning of the year, you put in $10,000 directly into the Moderna stock. Today, on 12/31/23, your $10,000 has turned into a total of $5,537. Ouch. That hurts. But it gets worse, don't worry, because let's go on to number 4 on my list of the worst performing stocks of 2023, and this one is also listed in the S&P 500 index, and surprisingly or not, it's Dollar General. And of course, their stock price is more than $1, but overall, there's a lot of skepticism over what's Dollar General gonna do in 2024 and beyond. And all your eggs into this basket, well, it's smelling pretty rotten. Don't you agree? Now, even though their profitability is positive compared to Moderna's negative profitability, it makes you wonder what's going on here. Well, see, what's happening here is that the industry, the analysts, are beating up Dollar General. See, what's interesting, if you look at the financial reports of Dollar General, if you're interested in this company, you can see that their revenues are increasing. Typically, if revenues are increasing every single time that they report and profitability is increasing, why is the stock price down 44%? Well, that's as a result of analysts being worried about how can Dollar General hold on to this profitability, remain strong, and more importantly, how can they continue to grow in the years ahead? And because there's a lot of fear, a lot of uncertainty, and a lot of doubt on this company, it's just driving down their stock price. And you know, that $10,000, let's say you invested it on Dollar General at the beginning of 2023, you would have a total of $5,572 today. Yes, just about half of your money, poof, gone to the Dollar General store. And as I mentioned, I use Seeking Alpha a lot. That is my go-to investment resource. It tells you anything from articles, but most importantly, the financial resource. It provides everything to you, including dividend valuations and dividend history. Right now, they're running a special sale for New Year's. I'll include a link down in the description below if you want to up your investment research game in 2024. Number 3 on the list. Now, this is our last company that is listed in the S&P 500 index. The other 2 are really bad. Get ready. Just woo. But this ticker symbol, ENPH, is down negative 47.63% this year. One of the top negative stocks listed in the S&P 500. So even though the S&P 500 rose up 24%, returned 24% this past year, ENPH is dragging that down. Maybe we could have got like 25% or 26% return. Thanks a lot. So even though their revenues are slightly declining here, the bigger issue with ENPH is that they play the game in the information technology sector. And we all know information tech is on a hot roll right now. So what's embarrassing about that is that the 9-month price performance of ENPH is negative 49.51, whereas the infotech sector median is 15.14% positive. So this is like really bad. This thing is pulling down the average as a result. So if you invested $10,000 in ENPH, keeping up with our $10,000 example, right now today, you would have $4,987 left over. Are you ready for the big two doozies? Here they come. Get ready. These are going to hurt, especially if any of you invested in them. If you do, comment below, let me know, just so I can empathize with you, because I'm sorry that you had to go through this, especially if you got it from some really bad financial advisor or you just listened to somebody that didn't know what they were talking about. I'm sorry. Number two, before we get, of course, to the top one, number two is Body, B-O-D-Y. This is the Beachbody company. You know, they got their fame with the famous P90X, Insanity, and things like that. But the issue is being a home workout company, and I think that especially after the COVID lockdowns, right? Everybody's going back now. Maybe they want to go back to the gym. So the money's kind of flowing more toward the actual gyms as opposed to home workout solutions. And they got to figure out, how do you continue a high on P90X and things like that now 10, 20 years later? And the other issue is that a lot of people are concerned about their multi-level marketing setup. So with that in mind, here's what happened with Body. Negative 68.49% in 2023. So think about this. S&P 500 is up 24%. Beachbody down 68%. More than half of your money is lost as a result of investing in Beachbody. The profitability shrunk throughout the year, and I guess you could say that's probably expected, because at the end of the day, a lot of people are going to sink in their money on the whole new year, new me phenomenon, right? Fitness tends to get a lot of benefit in the quarter one, and then as quarter 2, 3, and 4 go on, not as many people are working out and staying consistent. So Beachbody's profitability and their revenues are typically going to be higher in the first of the year than it is in the last of the year. It's obvious. But the problem is it continues to decline year over year. So get ready for this. I'm having a hard time now even bringing these numbers up. So if you had $10,000, and oh my God, if you put all that $10,000 into one single stock, and that stock was Beachbody at the beginning of 2023, right now you would have a total of $3,152 left. Doesn't that just punch you in the heart? I mean, think about that. Your hard-earned money that you put in there is now only worth $3,152. Can it get any worse? And the answer to that is absolutely it can, with our number one worst performing stock on my list of 2023. If you think Beachbody hurt, number one is going to just leave you bruised and battered. It's going to be the worst. Buckle up. Go ahead, put your lap bar down. Make sure everything's secured, you're in your seat, and you're holding on tight for this number one worst performing stock. Well, overall profitability of this particular company rose during 2023, so that's actually good. Of course, there is a lot of skepticism on this particular company about its future and how it can continue to hold its strength and grow. Very similar to Dollar General, but even more so. The other issue is this one has been absolutely hyped to crap on YouTube in 2020, 2021, and a little bit of 2022, and people were just holding on for dear life, I think, and the problem with that is just this year alone, it's even worse. This stock in 2023 had price performance of negative 82.35%. You know, some people like to say, can I lose all my money in the stock market? Well, here's a great way to do that, because 82% is so close to 100, so close to all of your money being lost. It's very, very sad. Your $10,000 that you invested into this company in the beginning of the year now becomes only $1,504 today, 12/31/23. Considering you didn't panic sell on this particular company, I mean, hopefully you're just going to figure at this point you have $1,500. What do you do with that? Do you sell at a loss? Do you just, it'd be a good tax loss harvesting if you have it in a taxable brokerage account. But look, here's the thing. This channel right here, we're going to focus and continue to focus on financial independence. And a lot of that is my focus on the total stock market as well as the S&P 500, because at the end of the day, putting all my eggs into one basket can very much hurt. Sure, you could have went with something like an Apple or a Tesla, who both saw phenomenal returns in 2023, absolutely off the chart. And yes, they did beat the S&P 500 total return, but the issue is what happens when those companies eventually hit their peak and start coming back down. There's always going to be expansion and recession. They follow each other all the time. So I'd rather just play the entire stock market than worry about one individual one, because if I'm going to be down 82% on my money, that's not good. So let's stop wasting time and reveal this company to you. Down 82%. Did you guess it? Yeah, AMC, the number one hype stock on YouTube, was down 82% just this year alone. People are just trying to hodl and hope for another short squeeze, but I mean, at this point, if you're down this much, what is a short squeeze? You'd have to return 100, 200, 300% even to get back out of the hole that you just dug in this particular stock. The big question for you right now, how do you think over this next year in 2024, as we ring in the new year, how's the stock market going to perform? Are we going to be doing really good, really bad? Feel free to even give like a percentage of what you think the total stock market's going to do over this next year. And make sure you hashtag 2024 so that way I can say hi to you, wish you a happy new year, and then maybe next year we can look back and see who was the closest on their percentage that they guessed. Drop me a comment down below. Happy New Year to you all. Make sure you check out this video next, and we'll see you in the new year.